ExamPrep.School. Maryland. Personal Lines Insurance Exam, exam code 20-29. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Auto insurance, casualty specific, dwelling policy, general insurance, homeowner's policy, insurance regulation, other coverages and options, property and casualty insurance basics, property specific. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under Maryland regulations, an applicant for a resident insurance producer license must complete how many hours of pre-licensing education prior to taking the licensing examination? A. 10 hours. B. 20 hours. C. 40 hours. D. 60 hours. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is B. This option is correct because Maryland requires 20 hours of pre-licensing education in each line of authority before the licensing examination can be taken. Reason A is not correct. This underestimates the required pre-licensing education hours. Reason C is not correct. This overstates the required pre-licensing education hours. Reason D is not correct. This substantially overstates the required pre-licensing education hours. Question 2. Under Maryland's non-resident producer reciprocity provisions, which condition must an applicant meet to qualify for licensing without examination? A. Maintain a residence in a state bordering Maryland. B. Hold a current resident producer license in the home state. C. Complete Maryland's pre-licensing education requirements. D. Obtain a surety bond approved by the Maryland Commissioner. The correct answer is B. This option is correct because reciprocity in Maryland requires that a non-resident hold a current resident license in good standing from the home state. Reason A is not correct. Reciprocity is not based on geographic proximity to Maryland. Reason C is not correct. Pre-licensing education in Maryland is not required under reciprocity provisions. Reason D is not correct. A surety bond is not a condition for non-resident reciprocity licensing. Question 3. Maryland insurance producer licenses expire biennially. To avoid being assessed a late fee, the renewal application must be submitted at least how many days before the license expiration date? A. 30 days before expiration. B. 45 days before expiration. C. 60 days before expiration. D. 90 days before expiration. The correct answer is C. This option is correct because Maryland requires renewal applications to be filed at least 60 days prior to the expiration date to avoid late fees. Reason A is not correct. This fails to meet the minimum lead time required by Maryland regulations. Reason B is not correct. This is shorter than the 60-day requirement and would incur a late fee. Reason D is not correct. This exceeds the requirement but is not the minimum period specified. Question 4. In Maryland, insurance producer licensees must complete how many hours of approved continuing education within each biennial renewal cycle? A. 18 hours. B. 24 hours. C. 30 hours. D. 36 hours. The correct answer is B. This option is correct because Maryland requires 24 credit hours of continuing education every 2 years for producer license renewal. Reason A is not correct. This underestimates the total hours required under Maryland law. Reason C is not correct. This overestimates the required continuing education hours. Reason D is not correct. This substantially exceeds Maryland's biennial requirement. Question 5. A Maryland producer license that has lapsed due to non-renewal may be reinstated without re-examination if the application is submitted within how many months of the expiration date? A. 6 months. B. 12 months. C. 24 months. D. 36 months. The correct answer is B. This option is correct because Maryland allows reinstatement without retesting if the application is submitted within 12 months of expiration and all fees are paid. Reason A is not correct. This period is shorter than the 1-year reinstatement window. Reason C is not correct. This exceeds the maximum reinstatement window allowed. Reason D is not correct. This far exceeds the allowable reinstatement period. Question 6. Which of the following actions by a licensed producer is expressly listed as grounds for suspension by the Maryland Insurance Commissioner? A. Failure to complete continuing education. B. Misrepresentation of policy terms to an insured GE. C. Non-payment of producer commission obligations. D. Maintaining an office outside Maryland. The correct answer is B. This option is correct because willful misrepresentation of policy terms is specifically cited in Maryland law as grounds for suspension of a producer license. Reason A is not correct. Failure to complete CE may lead to renewal issues but is not an explicit suspension ground. Reason C is not correct. Non-payment of commissions is a contractual matter and not listed as a suspension ground. Reason D is not correct. Maintaining an office outside Maryland is not a statutory ground for suspension. Question 7. A Maryland licensed producer failed to complete the 24-hour continuing education requirement by the renewal deadline and continued to transact insurance business without a valid license. Under Maryland insurance regulations, which administrative penalty is the insurance commissioner most likely to impose? A. A civil penalty of up to $500 per violation and suspension of the producer's license. B. A civil penalty of up to $1,000 per violation and suspension of the producer's license. C. Immediate revocation of the producer's license without a civil penalty. D. Criminal prosecution with potential jail time for each violation. The correct answer is B. Under Maryland law, the insurance commissioner may assess a civil penalty of up to $1,000 for each licensing violation and also suspend the license for failure to meet continuing education requirements. Reason A is not correct. The maximum civil penalty under Maryland regulations is higher than $500 per violation. Reason C is not correct. License revocation alone is not the sole remedy. A civil penalty of up to $1,000 may also be imposed. Reason D is not correct. The Commissioner's enforcement authority is administrative and does not include imposing jail sentences. Question 8. An insurer intends to appoint a newly hired individual as its residential lines producer in Maryland. The individual has submitted a license application but has not yet received a resident producer license. Under Maryland law, which action must the insurer take before the individual can legally transact insurance business on its behalf? A. Submit the appointment and begin transacting business immediately while awaiting license approval. B. Obtain the individual's resident producer license approval before submitting the appointment. C. Execute the appointment within 30 days after license approval without regard to initial licensing. D. Notify the commissioner of the intent to appoint and permit provisional appointment for 60 days. The correct answer is B. Maryland requires that an individual be fully licensed before an insurer may submit an appointment for that producer. Licensing precedes appointment. Reason A is not correct. An appointment cannot be effective until after the producer holds a valid license. Reason C is not correct. Appointments must follow licensing, not be deferred after approval. Reason D is not correct. Maryland law does not allow provisional appointments based only on notification. Question 9. Under Maryland Insurance Code, the insurance commissioner's investigatory subpoena ducis tecum may compel an insurer to produce which of the following? A. Claim files and underwriting manuals. B. Premium rate filings submitted to the commissioner. C. Actuarial reports filed with the National Association of Insurance Commissioners. D. Producer appointment and termination records. The correct answer is A. The insurance commissioner's subpoena ducis tecum authority in Maryland extends to compelling insurers to provide books, records, documents, claim files, and underwriting manuals relevant to an investigation. Reason B is not correct. Premium rate filings alone do not encompass the full scope of books and records subject to subpoena ducis tecum. Reason C is not correct. Actuarial reports filed with the NAIC are not the exclusive documents covered by the commissioner's subpoena power. Reason D is not correct. Producer appointment records relate to licensees, not the insurer's own underwriting or claim documentation. Question 10. Under Maryland law, which of the following types of records may the insurance commissioner examine when investigating a licensed insurance producer? A. Premium payment records and commission statements. B. Customer credit reports obtained by the producer. C. Insurer internal audit working papers. D. Actuarial assumptions used in rate filings. The correct answer is A. The commissioner's authority to examine a licensed producer's records includes premium payment ledgers and commission statements to verify compliance with licensing and fiduciary duties. Reason B is not correct. Customer credit reports fall outside the scope of the producer's transaction and premium records. Reason C is not correct. Internal audit working papers are maintained by insurers, not producers. Reason D is not correct. Actuarial assumptions pertain to insurers' rate filings, not producer records. Question 11. Before transacting insurance business in Maryland, an insurer must obtain a certificate of authority issued by which entity? A. National Association of Insurance Commissioners. B. Maryland Secretary of State. C. Maryland Insurance Commissioner. D. Federal Insurance Office. The correct answer is C. Maryland law requires insurers to secure a certificate of authority from the state's insurance commissioner before they may lawfully transact any insurance business within the state. Reason A is not correct. The NAIC is an industry association and has no authority to grant state certificates. Reason B is not correct. The Secretary of State does not issue insurance certificates of authority in Maryland. Reason D is not correct. The Federal Insurance Office does not issue state certificates of authority. Question 12. Under Maryland law, a non-admitted insurer is best defined as an insurer that A. Holds a surplus line certificate to transact certain business. B. Operates solely as a reciprocal inter-insurance exchange. C. Lacks a valid certificate of authority to transact business in Maryland. D. Is automatically subject to all Maryland market conduct regulations. The correct answer is C. A non-admitted insurer in Maryland is one that does not hold a certificate of authority and is therefore not authorized to transact insurance business in the state. Reason A is not correct. Holding a surplus line certificate indicates limited admission, not non-admission. Reason B is not correct. Reciprocal exchanges may be admitted or non-admitted, but the defining feature is authority status. Reason D is not correct. Non-admitted insurers are exempt from many state regulations, not fully subject to them. Question 13. Which requirement must be satisfied before a Maryland producer may place business with a non-admitted insurer? A. Insurer maintains an office in a bordering state. B. Insurer has submitted a trust deposit to the state treasury. C. Producer has held surplus lines license for at least 2 years. D. Insurer appears on the commissioner's approved surplus lines list. The correct answer is D. Maryland law allows placement with non-admitted insurers only if the insurer is on the Commissioner's approved surplus lines list, ensuring oversight of surplus lines carriers. Reason A is not correct. Maintaining an office elsewhere does not satisfy Maryland surplus lines criteria. Reason B is not correct. Trust deposits apply to financial solvency but do not by themselves authorize placement. Reason C is not correct. Producer licensing duration is not tied to non-admitted placement authority. Question 14. Within how many days must an insurer file notice of appointment for a newly appointed Maryland insurance producer? A. 60 days after producer licensure. B. 30 days after appointment date. C. 15 days after the first transaction. D. 10 days after the first application is taken. The correct answer is C. Maryland regulations require insurers to file notice of each producer appointment within 15 days after the producer's first insurance transaction on behalf of the insurer. Reason A is not correct. Filing is tied to first transaction, not the licensure date. Reason B is not correct. 30 days is too long compared to the statutory 15-day requirement. Reason D is not correct. The window begins after appointment and first transaction, not immediate application taking. Question 15. A binder issued by an insurance producer in Maryland remains effective for up to how many days unless replaced by a policy? A. 120 days. B. 60 days. C. 90 days. D. 30 days. The correct answer is D. Under Maryland law, an insurance binder issued by a producer may bind coverage temporarily for up to 30 days unless the policy is issued and delivered earlier. Reason A is not correct. 120 days far exceeds the maximum binder duration. Reason B is not correct. 60 days exceeds the statutory maximum binder period in Maryland. Reason C is not correct. 90 days is longer than the allowed binder expiration period. Question 16. Under Maryland regulations, after issuance of an insurance policy, an appointed producer must deliver the policy and render premium accounting to the insurer within how many days? A. 45 days. B. 10 days. C. 15 days. D. 30 days. The correct answer is D. Maryland law mandates that once a policy is issued, the appointed producer must deliver the policy to the insured and render the premium accounting to the insurer within 30 days. Reason A is not correct. 45 days exceeds the maximum period allowed under Maryland law. Reason B is not correct. 10 days is shorter than the statutory 30-day requirement. Reason C is not correct. 15 days is insufficient compared to the 30-day window prescribed by law. Question 17. A Maryland insurance producer collects a $2,000 premium check from a commercial client on Thursday, September 14th, and deposits it into the producer's trust account on Monday, September 18th. Which statement best describes compliance with Maryland trust account regulations? A. This practice violates regulations because premium funds must be deposited by the next banking day after receipt. B. This practice is acceptable because the deposit occurred within 5 business days of receipt. C. This practice violates regulations because premium funds must be deposited within 3 business days of receipt. D. This practice is acceptable if the insurer provides written consent for the delay. The correct answer is A. Maryland law requires that premium funds be deposited into a designated trust account no later than the next banking day following receipt. Delaying until Monday over the weekend constitutes a violation. Reason B is not correct. Allowing 5 business days exceeds the statutory requirement to deposit by the next banking day. Reason C is not correct. The 3 business day rule is incorrect. Maryland requires next banking day deposit, not 3 days. Reason D is not correct. Insurer consent does not extend or waive the mandatory next banking day deposit requirement. Question 18. A Maryland producer receives a renewal premium of $1,500 and deliberately holds the funds in the trust account for 45 days to earn interest before remitting payment to the insurer. Which fiduciary duty violation has occurred? A. Commingling of funds. B. Rebating. C. Conversion of funds. D. Excessive fee disclosure failure. The correct answer is C. Holding premium funds to earn interest before remittance constitutes conversion, since the producer has misappropriated fiduciary funds for personal gain rather than transmitting them promptly. Reason A is not correct. Commingling involves mixing trust funds with personal funds, but here the funds were kept separate yet misused. Reason B is not correct. Rebating refers to offering unapproved discounts or inducements, which does not apply to holding funds for interest. Reason D is not correct. Failure to disclose fees is a separate disclosure violation and does not describe misappropriation of fiduciary funds. Question 19. Under Maryland insurance regulation, how is the unfair trade practice known as twisting defined? A. Inducing a policyholder to lapse or replace a policy by misrepresenting its terms or benefits. B. Encouraging a policyholder to increase coverage using commission incentives. C. Soliciting insurance business by offering rebates of previously paid premiums. D. Charging different premiums or benefits based on race or national origin. The correct answer is A. Twisting is the misrepresentation of an existing policy's terms or benefits to induce a policyholder to lapse or replace the policy, which is expressly prohibited under Maryland law. Reason B is not correct. Commission incentives to increase coverage do not involve misrepresentation of an existing policy's terms, so this is not twisting. Reason C is not correct. Offering rebates of premiums is considered rebating, not twisting. Reason D is not correct. Differential premiums based on protected classes constitutes unfair discrimination, not twisting. Question 20. Which of the following is a recognized red flag indicating the unfair practice of churning in Maryland? A. Frequent replacement of policies within a short time frame to generate additional commissions. B. Offering lower premiums to first-time buyers based on loyalty credits. C. Extending a policy term without premium adjustment upon renewal. D. Including standard endorsements without altering coverage limits. The correct answer is A. Churning occurs when an agent induces multiple policy replacements over a brief period primarily to earn additional commissions, which is prohibited. Reason B is not correct. Offering loyalty credits to first-time buyers is not a pattern of replacement for commissions and does not indicate churning. Reason C is not correct. Extension of a policy term at the same premium is an administrative action, not churning. Reason D is not correct. Adding standard endorsements without changing limits does not reflect policy replacement and commission churning behavior. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.